My bad. I'm lacking. My mic was unplugged. But anyways, I want to do a market review. I want to get right into it. But yeah, so I want to use. I've been backtesting this a lot. This is anchored IPTA lower time frame, and it gives me bias on just type of liquidity that we're gonna reach for within a session. And this like came like you can't tell me that this isn't like a coincidence that we ran just to these highs here. These previous 40 candle highs right here. We ran up, and then that's where you put the high in the day in. So I've been really trying to backtest this recently, and that's kind of what I've aided me in my bias throughout the past like 2 weeks. I haven't been using it for very long, but I have been trying to backtest it, and it has been pretty useful. And just seeing in terms of probable liquidity, I mean, you don't really need this if you're just looking like, oh yeah, these highs are gonna be the draw on liquidity, but it kind of just helps you frame it a little bit more. So if you don't know what the 20-day, 40-day, and 60-day look back is, it's pretty much the same thing. You anchor it on the midnight opening, and then it's 20 candles out, 40 candles out, and 60 candles out, and then that will give you a better intraday bias, or can help aid you, because that's how I've been getting my bias throughout the past probably like 2 weeks now, or I would say a week and a half maybe, and it kind of helped me aid in having to draw liquidity that was here. So if we look at it, let's go over the action that we had today, what type of PA that we had. So if we look on ES, or on NQ, sorry, we drew up into this higher time frame balanced price range, buy side, sell side, and we draw up into that, and look at the wick that we create here. So we know that price doesn't really have much interest to really hang around up here. So if we're just thinking about this in terms of probabilities, we know that we want to do some form of repricing lower. We want to take sell side liquidity before we really do anything. So wait, let me take that indicator off. It gets a little bit too much. So the fact that we came up to this level and stayed there for not long at all, created this wick, tells me that, hey, we likely want to seek lower prices here. So if we were to use this off the 15-minute time frame, we have some 40-day lows and 60-day lows that could be a good draw on liquidity. And if we look on ES, I do want to pull it up on ES, but it doesn't. It's not like a set in stone thing, you know. Let me take new week opening gap out. Like, look at where we drew into on ES, right into these 40, 60-day lows, and we drew into all the sell side that we've been generating. So in the morning, let's go over the morning price action. So market opens right around here, and if we look on or if we look on ES, right when 9:30 opened, which is right here, we drew up into this. I wouldn't really call this an order block. I would say we drew up into this fair value gap here again, and we want to seek lower prices. We had all this low resistance liquidity. Pretty nice little AM session here. So let's see how we could have traded this. So we look at NQ. Where's NQ at the time? That's what I really like to trade. We're in this fair value gap here, this 15-minute fair value gap here, and look at the wicks. We have 1, 2, 3, 4, 5, 6 wicks right there, and now we're kind of waiting for what market open does. I want to see. I had this imbalance in mind that we could have possibly seen a Judas too, so I wasn't really immediately bearish straight off rip here, because I want to see if we could possibly, since my bias was bearish at open, I want to see if we could get a Judas swing into this fair value gap here. But we never did that. So we had displacement lower here at 9. And then 9:30 respects that fair value gap. But I don't know if it's going to respect it. I want to wait. But we ended up respecting that here. And we ended up respecting that. So let's zoom in to maybe a 1-minute chart. Let's just see. We end up respecting that. We get displacement lower. We come back. Order block right there. More displacement here. This now becomes maybe a good entry here. And then we have all this low resistance liquidity. Where is the low resistance liquidity at market open? Where has it been generated? It gets engineered for market open. That's where we end up breaking down. We have break of structure already. We know it's more likely, because of the narrative that we're rejecting highs, that we want to at least come down to these lows, if not these lows, if not the hourly, all this liquidity that we have here. And that's exactly what the market does. So now we're waiting. We come into here. We have our bias established. We get displacement, fair value gap, order block, boom. And then what do we draw into right here? 950 macro does give us a retracement and then another. This is just an engineered higher. And I'm not gonna lie, I kind of wanted to see these highs, but I wanted them too early. So see here, ES at the time had drawn that hourly imbalance, and then we had fair value gaps in, fair value gaps out, but then we wanted to. This is short term. Now this is an intermediate term low. So that's what you want to see at a higher time PD rate. You want to see, or at least that's what I like to see, short term low, now intermediate term low, and now this next low is going to hold significance. And notice what we had here. SMT at these lows here. This was beautiful. This was gorgeous. I was looking at this, and you just can't help but just say, man, get some good price action here. So what do we do? What do we do? Fair value gaps in, fair value gaps out. Notice how we still have all this low resistance liquidity here on NQ. But we formed an SMT. ES has liquidated all this. NQ is failing to. And keep on top of that. Are we in a higher time? 4 hour fair value gap? Yeah. 4 hour fair value gap. 4 hour fair value gap. 4 hour balanced price range there. So that's where we're in. And if we look at the 1 minute, we're getting displacement out. Let's see. Fib, probably OTE. Probably OTE. Yeah, OTE right there. Displacement. Another fair value gap. Another fair value gap. We have a 15-minute order block right here. This first one. And then you could use the other two. See, that 15 minutes is probably going to be a 5-minute. No, that's a 5-minute order block right there. So you have your first 15-minute order block right here. That's this line here. Look at the accumulation around that level. Form SMT. Boom, boom. And then here, we come into buy side liquidity, my short-term draw liquidity. And I also want to see that fair value gap. So notice how this morning, I want to see this fair value gap become the draw liquidity. And the fact that we've engineered 1, 2, 3, 4, 5 highs right below that tells me that, hey, the market's likely going to draw up into that imbalance and into these highs. And also that IPTA data range liquidity. That IPTA data range liquidity right there. We have that right there. And also this. So that's exactly what we end up doing. If you look at the 15-minute chart, here is a 1 hour order block, and look at how well that gets respected there. If you go to the 15-minute chart, we also create an imbalance right there. An imbalance with that level. Look at what price does. You know, 4-minute SMT right here. And then boom, displacement. Then we come back down. And then we come all the way back down here. Probably, do we form an SMT there? I feel like we have to. Yeah. Another SMT there. Fair value gaps in, fair value gaps out. Boom. We reprice where? Where's the market close around? Like the market's in a hurry to get to that level. And that's where we end the day. Right at the anchored IPTA data range. Very nice to see. If you look at this, just what type of day is this? Where's midnight? Let's pull up midnight. That was another confluence. We had New York midnight opening price right there. So we engineer lower. At 9:30, we open here. We get displacement. And then what do we have? We have a 10 a.m. reversal. And the day closes like that. Very nice delivery. Very nice delivery. So if we're looking at this, what is price now done? What is price now done? So we've cleared all these. Technically cleared all these sell stops. We're bouncing off a 4-hour PD array. This, in my opinion, looks pretty bullish. We come back down here. We swept these equal lows here. We have these relative equal lows here, but I think we want to deliver buy side first. If we look at this, We've kind of drawn into a weekly imbalance here. I don't know. I'm still not expecting too much overall. We're kind of just within this range here. So I think we could just consolidate here. If we look at YM, oh, I really don't like YM. We have this high, this high. This is a big dealing range here. It's taking all this liquidity and it's taking all this liquidity. So we can literally stay within this range for years. Well, not actually, but we can stay in this range for however long we want. So YM, I don't want to touch that. No, thank you. So therefore, it's got to be a little bit nimble. If we look at DXY2, notice that DXY is in a consolidation too. We didn't come down here. If we don't expand tomorrow on DXY, then I don't know what DXY wants to do here. Let's look at the internal dynamics. Okay, we should respect this for my gap here. I do want to check one more thing. I do want to point out the new week opening gaps. Because that's what I like to look at. I like to use new week opening gaps in my analysis. Notice here where we put the high. Right, new week opening gap, where we draw back into new week opening gap. Or these are new week opening gaps and new day opening gaps. New week opening gap, boom, perfect. New week opening gap, new week opening gap. It's a coincidence? I don't think so. Here on ES, new week opening gap. New week opening gap. New week opening gap. Expansion lower. Draw back to the new week opening gap. New week opening gap. Where do we close? New week opening gap. Right at it. It's perfect. It's beautiful. Anything else? I do want to look at a little bit of Forex. Euro display slower today. 4-hour balance. I want to stay away from Euro. GU does look good. GU is taking that buy side liquidity pool. Ooh, order block right there too. Daily order block. GU I'm pretty bearish on, but I don't trade Forex like that. Anyways, I think that's it. Yeah, I'm gonna close this one. It was a pretty nice day. I was live today too. We live tomorrow for sure. And yeah, we're just gonna continue doing these market reviews. I kind of like them doing it in the live setting. I think it's a little bit easier on me. I don't have to create a whole slideshow, but I also like doing the slideshows. But anyways, I appreciate you, and